how much are we solidifying on a narrative versus still running around like chickens with our heads cut off?
I think we're pretty close to a narrative right now. Certainly since the end of March, we've seen pretty much a 7th month straight sell-off in the bond market, yields going up very, very high. It seems as though we're reaching a point in the cycle where we're going to establish a range. And maybe the low is somewhere around 430, which was the high from a year ago, last October. And we've seen that 5% brings in buyers. I would say after 7 months of the kind of volatility we've seen, we're due for a range.
Where do you see it? Is it really an indicator that other people are seeing as strong?
I think Jay Powell and the Fed have every right to come out today and say, we told you so. We're in a soft landing. We've got full employment and inflation has moderated. If you look at the 3-month and 6-month annualized rate of core PCE, it's 2.5 and 2.8%. We're there. I guess the question is, the trajectory is down. How do you flatten it out from here? And I think that's the big question ahead. But for sure, I would have thought we would have seen more widespread signals of recession, and we haven't.
Well, but hold on a second. And Bob, I'd have to really dig into that a little bit more. If Jay Powell came out today and said, I told you so, everyone's screens would light up. People would say they're overly complacent. They don't understand the risk of reinflation. They don't understand that this underlying strength, as you were talking about, Bob, is going to continue. Why don't you agree with that? Why don't you say, you know what, we are seeing unexpected strength. This does lead to a potential need to keep rates higher for longer.
I said he had every right to, but he's also very, very smart, and that's exactly what he doesn't want. He doesn't want to accidentally ease financial conditions. He needs to buy some time, a couple more quarters, to see the impact of the long and variable lags, and they're there. We've seen the ADP data today. We're seeing some slowdown in the labor market. We're seeing some pressure in the levered loan market. So there are signals that the slowdown will continue. It's trying to engineer that landing that's going to be very challenging for them.